The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. Eastern Time. And on this 18th day of September, what are we looking at? The Dow is up 85 at 22,354. The S&P is up 6.5 at 2506. The Comp Index is up 28 at 6,477. The VIX is down at 10.06, very low. That denotes buying pressure at this particular time. The E-mini right now, the December is up 7 at 2504. We're looking at a leg C on its way in the Chapman Wave 5 to a potential leg D, maybe a peak D later this week. So far, still very bullish. The question is, are we bullish or bearish? Right now, we've been bullish for a little while. We are bullish, expecting that we're getting closer this week to some kind of a short-term top, and I'll tell you a couple of reasons why. See this weekly chart? You see this up channel? See the Chapman Wave inside? This is the weekly chart of the E-mini. You see this inside track within the up channel, where the pinkish line, dashed line, becomes support, and the green line is resistance. This is what I call the sell zone or repellent zone. If there's a price move above and it holds sharply above, that's really bullish. If it fails and comes back down, next thing we know, by Thursday or Friday, we're trading in the 2492, 2486 area. That says, uh-oh, failed at that resistance area. The MACD, it hasn't crossed positive yet. Let's see, it's minus 0.83, so it is 2. It's getting close to crossing positive. We've got a whole week to go, so we'll see what happens here. And it is a week. This is a Jewish New Year week, so I want to wish all people that are celebrating the New Year, Happy New Year. And so what we're also looking at is the support level of 2486 on the 9-period exponential moving average is really important. Why? Because if there's a close below it in leg C going to a peak C, that says, whoops, D might only be nominally higher. If C continues tomorrow, I'm not sure it can, but let's just say it can. Why do I say I'm not sure it can? Because this is a peak E with a flagpole right there in the 120-minute chart. First thing I do is I grab the outer ends and I say, okay, don't even have to go to the bottom. I just need to go to the body low. And I'm saying, you know what? Could trade in this range a little longer in the 120-minute chart. The close below, the close below 2502 on any 120-minute candle says, all right, be careful now. You can test the low of 24.9950 and a push above 25. Can you believe we're talking about 2500? 2506, round number high, would be a positive and say, you know what, it can go a little higher before you come back into that rectangle formation. MACD is good, not great, but good. Stochastic is very strong at 90%. Now let's do a couple of things. We get rid of the 120-minute chart. Why? Because we want to be looking at other pictures of the market. We move this to there. I want the monthly chart to be a little bit smaller. Right there. And let's go on with the analysis. Making the weekly chart a little bit bigger. Look at what we're doing here. INDU. The Dow. Look at this. Spikes to a higher high within the Dow 120-minute weekly chart, up channel and inside track resistance zone. This goes to 22,000. Look at this. It goes all the way this week to 22,460. And the support on this particular pattern is 22,160. And the MACD has, in fact, finally crossed positive. And the stochastic is good at 81%. Not great, but good. MACD in the daily is outstanding at 98.48. That's almost 100%. That is really strong. And it's getting close to some kind of a some kind of a pullback, but we are still in Chapman Wave 5 in the Dow 120-minute chart. I'm going to show you something else in a moment. I just want to get out of this here to show you the S&P. I'm not sure what happened with the S&P on Friday. Was it a rebalancing or something, or was it a dividend? I don't know what the heck, but it pulled back a little bit. It's been corrected. Oh, I wonder what was going on. The S&P cash is at 2506. This extends leg C. I thought that was 37. No, I made a mistake. I called it. It never happens. No, hardly ever does it happen. TradeStation gave an incorrect reading. It had a gap down on Friday for the S&P. I couldn't understand it, so there was a mistake. No, just like the Dow, we extended this. Is a leg C, it's not peak C, and that's going to be very important. Oh, that whole analysis I gave over the weekend had that incorrect about the S&P, but everything else was correct. Now, this extends the weekly chart. The MACD is also just about across negative. If it deflects lower here, it means that the S&P has to go under 2506 right now, has to go under 2488, and that'll be at least a short-term big negative. In the meantime, monthly, like the Dow, the monthly chart is still very positive, and we're looking at the QQQ, which is the NDX 100 trading vehicle. This is the PowerShares Trust Series, struggling. It's only up 20 cents here at 146.26. It did squeak to a double top at 146.59 on Friday. Amazing how that happens. I cannot yet go above 146.59 for that new leg to the upside. If it does that, it'll be E/C in the weekly chart. And that says that we could still go on for another 2 weeks or so to the upside. I don't want to step out of place here. Everything so far is looking very good. We've had a rotation. What did I say? For over a week and a half, I've been saying gold should be coming down. The dollar should be rallying. Bonds should be going down. Yields should be rallying. Crude oil should be rallying. Copper should be declining. This has been my stance. This is what for my subscribers, this is the kind of positions that we're looking at, and it's been helping us for our position trading. The gold right now down 13 at 1311.50. I see 1300 as being key, but I would not be surprised on a weekly basis by Friday if there is actually a close under 1306. That's the 9-period exponential moving average. That means that peak D might have a deeper connotation. We'll just go one step at a time. Gold is in a short-term sell mode. The weekly chart hasn't even given a sell signal, so let's just treat it as an initial downside breather that gold is needed for quite a while. And that's all the way I'm looking at it. I'm not sure it's a major sell signal in gold, but I have to tell you that the action of the dollar, DXY, up 14 cents at 91.97 is really a mystery. Why? Because if you look at the USD JPY, and the two have been tracking one another in trend for so long, that to see the US dollar Japanese yen, basically the yen, rallying so sharply in a single leg A up, trading at 111.48, coming off the 107.50 area, this is very, very good action, especially in the weekly chart, as the weekly chart is starting to improve. So the dollar is going to play catch up. That's what I'm thinking of. If it doesn't, it'll be a hamburger catch up. And we'll go to the high-grade copper. High-grade copper right now is trading at, it's up just a little bit, but it's in a down mode in the daily, and I have a sell signal in the weekly. I'll be right back. Basil Chapman, Dow's up 76, S&P's up 6. We'll look at the yields in a moment.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member, FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So I was asked about the 40-year T-bond. I have the 40-year, 10-year Treasury note interest rate right here in front of me. That's the 10-year. Yeah, this has got some notation on it. I couldn't, on the spur of the moment, find my TYX 30-year, but the same chart. I've got one completely notated. I've got the bonds as well, but just for the moment, it's easy enough to see the yields have been since 1981, right there. That was September of 1981, going to October. Yeah, September of 1981. I'll give you numbers. This is a continuous contract, so the numbers don't mean anything. The pattern absolutely does, but the numbers get changed because it gets smoothed out. But just to give you an example, it's gone from 152 round number high back in September of 81. So that is 15.2%. And look where it is right now at 2.7%. I would say that's a bit of a drop. And what's even more important about it is that you've got the stochastic pulling back here. You've got the price still pulling back. So for yields, this is just a bounce that we're seeing in yields because it hasn't broken out at all. So let's just go to the TNX since the pattern's exactly the same. And I've got it notated. You'll see something a little different here. This one actually goes back to 1969. So can you imagine? So in 69, let's go to, I've only got it back. Oh, wait a minute. Whoa, what am I saying? I didn't realize this goes back. Oh, yes, it does. It only goes back to September of 1967. But in 1967, it was the yields, 10-year yield was, and I'll give an approximate because I'm just missing, there it is, of 5.3 or 53. It skyrockets to 157, and we're trading right now at 2.2. So there's been an incredible move to the upside, huge move to the downside. And I drew this in some time ago just to show where we are historically. This is over the last 5 years, 5, 6, 7 years. We're just in a range, in the lower end of the range. So a couple of questions. So Paul said, well, what did he say? TFNN. How come you never look at interest rates? And that's what's going to move the market now. I don't know how you can say that, Paul. For 15 years, I've been talking about the Japanization of interest rates. I even had webinars based in it. I've been talking about rates going lower and lower and lower. At this particular point, we're seeing rates still in the lowest range historically. However, there has been a bump up, and that bump up says that within the context of markets, what we're looking at is there is just enough economic uncertainty for the Fed just to hold off a tad longer, or to have held up until now before actually saying they're going to raise rates again. But the way that the stochastic MACD in the monthly chart is acting, we smack dab in the middle of a lower range from 2014 to the present day. When, not only that, as Peake says in the den, every single, I talk about this all the time, and every single weekend for my subscribers for years, I've shown the triple yield chart. This is the triple yield chart right here. I show the white, I show the brown. I do it on air. So maybe you've just missed it, Paul. So no, it's very important. That's the reason why housing starts have improved over the years. And but you're getting, they're two separate things completely. Rates and the general economy, rates and home building, rates and individuals, when it comes to, say, credit cards and all that, these are all areas of significant interest. Little inside joke there. But at the same time, each one overall has a beneficial factor if rates remain low. But at some point, you can get separation of what has happened to certain sectors because of those rates, and they individually can get overboard. And that, I think, is happening to a great deal in the housing market, especially some areas. I was listening to something just recently about housing prices here in Boston, in some areas that were, some people had bought their houses in the, not the north, I think it was in South Boston, no, in East Boston. And they bought houses decades ago for $10,000, $12,000. And they are now being forced to exit those houses because the prices that they're being offered would just be impossible to refuse. 2 million. I mean, this is 1.5 million, 1 million. That's an incredible increase. So I believe that we are in the throes of a glut in real estate, building a glut. I'm sorry, not in the throes. We are in the throes of building not just a glut, but an immense glut in areas like Brooklyn and some parts of Manhattan, but mostly in the Brooklyn and outer areas. It's impossible to believe what the prices are being asked, but at the same time, the prices for the rents are actually out of sight. I don't know how people can afford them. So if you look at wood, which is the iShares Global and Timber and Forestry ETF, it's making new highs over the last week, and not so far this week, but very close. And that has just pushed it above the channel resistance line, Chapman Wave inside track resistance line. That's a big positive so far. But the housing, the HGX, the housing index, Philadelphia Housing Index, hasn't gone above 287.12. It's getting close. There's a 285.40. The week has just begun. If it makes a cup formation and doesn't fail but breaks out, that's one thing. If it fails, that's another thing. So I'm looking at this. I've done a lot of studies in terms of what I look at and what the importance of these. So let me just show you here a question about the 10-minute E-mini. Yeah, 10-minute E-mini had that spiral to the upside early on, and now it's making the rectangle formation. I'm not sure if it's going to break to a new recovery high, all-time high, of about 25.06 today. I don't think so. I think my 120-minute chart is suggesting that we could be having a bit of a pullback into tomorrow. But I still expect leg D. So peak C in both the Dow and the S&P sometime within the next day or two, and then leg D. And then we've got to be a bit careful, as we always are. So now let me just continue here. So yes, crude oil would be the next thing to look at. Crude oil is down 46 cents at 49.98. It went to a peak. It went to a peak D/B, and that's going to be very important in the analysis. Why? Because the weekly chart has got the arch pattern they can go to. Why is that not moving? Okay, an arch pattern that can go to an M-shaped pattern. So this is going to be very important. If crude oil instead of pulling back under 48.50, it's at 50 right now exactly, down 45 cents, being repelled just momentarily by the 50.42 level of the 200-period moving average. I think it's just stuck here just a little bit. I think it's going to go higher, and then we get a test. And what is the test? The test is a close below 48 this week would be a big negative, and a close above 51.25 this week would be any day would be a big positive. Next question I had was, it was right here. Oh, there's the break. Where was it? I'll get it. Oh, it was about the Dow. I'll be back and we'll talk about the Dow. Basil Chapman, Tiger Technicians Hour. Dow's up 76. S&P's up 5.74. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. So, I had a couple of questions over the weekend, like what are you looking at? And could you give a little bit more on Friday? Just at the end of the show, someone came up with some technical questions that I wasn't able to deal with because the show had just about ended. So I'm not sure how to do this. All right, let me start off with the Dow. The Dow made a left side, right side price time match based on not the low, but on a particular candle that I was looking at, and broke out in leg C. In the Chapman Wave Cup and Ladle pattern in the daily chart, you see this is what I show my subscribers every day. the two charts. One has got the MACD and stochastic. This one just has the 9-period moving average, 20 period. The red one is a 20-period moving average, and some of my Chapman wave proprietary techniques. However, what happens is that when in the Chapman wave, the reason why the cup and ladle pattern became such an imperative and such an important part of my work is that I found, especially after Investors Business Daily, for years and years, I had seen them talk about cup and ladle pattern, cup and handle patterns, which is the traditional way of looking at the market. It goes right to the left side lip, fails, makes a little bit of a cup formation, like a handle of a cup, and a small one, and then it breaks out. Well, in that particular technique, you really have to time your entry perfectly, because my contention is that a majority of the time, cup and handles come back and retest the gain. So your timing has to be really good. If you succeed in the whole thing, eventually it can move much, much higher, number one. Number two is, within the context of the cup and ladle, where it goes straight above, just like a ladle. You know, a ladle, the right side just goes straight up, and then it makes a hook at the top. That pattern takes you to at least a D, but very often an E, could even be an F, but you've got to be prepared. If C is not powerful, it's going to come back and test the breakout, in this case 22,179 in the Dow. If it is powerful, you don't test the breakout until after you've completed a D or even an E. And then you've got to be prepared to give back all the recent gains after the takeout. That's number one. Number two is the MACD. The reason why we are long and we're staying long at this particular point is, along the Dow, is that the MACD's fast-moving average is increasing in strength, not decreasing. The stochastic's at 98%. I mean, that is outstanding action. And the on-balance volume is getting a little overbought. That's what makes me a little cautious here. But I'm watching it closely, and this becomes a powerful move to the upside. But the on-balance volume is the hint for me as to when to time some exit strategy. The 120-minute chart keeps recycling to the upside. This is still leg D, still Chapman wave 5, and in the 120-minute chart with the technicals, the MACD is still strong, but just beginning to show signs that it's maybe getting a tad overboard. The stochastics at 97, which is very strong. Most importantly, you see this little dashed up channel line? We got repelled at that line this morning, and we're going to be watching that closely. So far, this is outstanding action. And it's just squeezing. Now I see a squeeze of the shorts, but I see new buying coming in. And where is the buying coming in? So we have a proxy for the XLF. We have a particular stock, and it's doing fabulously. The XLF right now is up. It's up 25 cents at 25.02 in leg B in a new buy mode. I needed that. Now we've got a buy signal that's gone to a buy mode in the day. You can fade at B, but so far everything's good. So this is suggesting we could go on a little longer if it's only B, but because it's underneath the previous, I have to call it a gray B because it's under the previous major high. And that says, yep, you've got to be careful. You can fail under, make a cup from an arch formation. So 25.60 is a breakout of major proportions to a leg D in the weekly chart of the XLF. That makes the support at the gap in the 24.20s really important to hold on any pullback coming. So the XLF, outstanding action. Stock we have, outstanding action. We can't complain at all. We're up 1.33% just today alone on that particular stock. The Dow's only up 0.35, S&P's only up 0.22%. So, and the XLF is up 1. So this is nice, a good proxy. We have, I spoke about the TRCCI, I spoke about the commodity index. And the commodity index is held very well because it's a mix. The Thomson Reuters Continuous Commodity, there we are, index. This is a monthly chart with the Chapman wave notation. We've gone to a peak A twice, hasn't gone to a B yet. It's held this mini uptrend support in the monthly chart. The weekly did go to a C. Oh, that goes the shorter term. Let me just double check here. 43822, 436.15, right. So that's on the weekly chart. It's had made a peak C, making higher highs, higher lows in an up channel. The MACD is improving. Stochastics good at 84%, but it's the daily that says, hey, this big spiral to the upside, taking a few days to regain energy. It'll stop regaining energy, and that energy will sink if the price goes under. It's at 411 right now, down to $1.86. If there's a close under 407, no, I want it underneath the candle before the breakout. The candle of the 1st of September with a high of 407.02. If there's a 4-point drop from here, be careful. Then the commodity index is going to pull back sharply, and then I wouldn't be surprised if crude oil actually joins them. Right now, crude oil out of the commodities is still the one that's keep playing catch up to gold and silver and copper that had fabulous moves to the upside. Now, this is going to be very important. Within the context of all the different things that we have 8 or 9 stocks. 9 stocks. There's 9 stocks or indexes. That's very high for us for a portfolio. I don't like that. In fact, I had another 2 that I was going to buy. We're going to have to sacrifice right now. I don't want to overdo it for the subscribers. They're all up. They're all doing very nicely. No, they're all doing from okay to very nicely. And I know that there are many subscribers that like to get the smaller price stocks, especially if it's in a category where the whole category is doing well. So we do have a couple of things like that. I mean, we had one Friday. We took was it Friday? Yeah, Friday we took a risk. We bought a crazy stock that's gone a little crazy lately, a very low price stock. We bought it at $4.12. It closed. That was the low on Friday, and then it closed nicely higher. And today, it went to $4.80. I mean, that's a huge gain. And I don't know if it can hold that, but it is in the sexy stock category. So this is where I like to experiment every once in a while. Every year, we have 1 or 2, maybe 3 times a year. We go for something nutty. That's like an option, low at $4, low price, but it has the potential to do something wild. Could be down as well. But this is the way I like to do it. That's the experimental thing. And I'm also looking at within the context of what we have. I can talk about this because we've had it for so long, and I do think it's getting a little toppier. So it's bound to pull back. We have 2 positions in a General Motors trading at 38.63. F/B in the daily, D in the weekly, D in the monthly. A fabulous move. We got in the 34s, it's hit the 39s. Hey, can it pull back? I don't see why it shouldn't pull back, but that is under the radar because most people are not looking to be buying the orders, but the orders have had a great move. I'll be back. Basil Chapman, Target Ignition Hour, and the Dow is up 78. S&P's up 5 3/4.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So what I'm doing here, I want you to do this because I had a question about it, but actually I had a question about the RTH. I'm going to go to about the XRT. That's the S&P retail, and this is the Market Vectors retail ETF. But look at this. Oh my. You know, this is a chart we've looked at. This is a chart formation we've looked at previously. I'm just trying to recall which chart it was. It'll come to me in a minute because my memory is best for charts. There we go. So this W formation is kind of familiar to us. Let me see if I can find it. Was it? Aha. Let's see if it was Triple M. Triple M, did I take it away? Yep, there it is. So this is familiar to us. Triple M had this pattern back in the weekly chart from the high back in March of 2015. It comes down to from 170 to 134 round number low on the 27th of August, bounces to 160.09 in November, and then pulls back in November 2015, pulls back in 2016 to 134.64, almost exactly. 134 is the left side, 134.64 is good, and then it soars to the upside. But there's a difference here. Look, what's the difference? In this particular instance, we're looking at, if I can ever remember what we're, RTH, RTH. We made a slightly lower low. Does that make a difference? Well, it wasn't slightly. It was 78.57 and 77.47, a dollar. Okay, not too bad. But this is going to be very important because if the retail ETF actually holds here and even rallies a little bit more this week, it's down 12 cents right now at 82.07, so maybe it won't. It's not in the categories that are rallying right now, but that would be very positive. And all I can say is that a break in the RTH above 84.08, the high of the week of the 5th of June, no, the week of the 5th of June, would be very positive. So let's just keep that in mind. And then we're going into the season, selling season, right? Christmas, all the different holidays. Okay, so another question came along here, and the question was, all right, retailers, okay, what did he say? So Bob says XRT, PIR, AAN, VSI, HAS, MAT, retailers, manufacturers, if I can read it, manufacturers that sell to retail. Oh, okay. So Chapman wave, let's just look at this. I'll do the XRT. XRT right now, this is the S&P retail, has made a peak C stop dead at the 200 period exponential moving average of 41.50. It made a high on the 13th of September at 41.54. Made a high today of 41.52. Stays young still, but it is pulling back. I wouldn't be surprised if we've seen the high of the day for the market at this particular point, because all the other indexes that I follow are suggesting that it's getting a little bit toppy on the day. So the Spider SB retail, yes, acting quite well on the day. On the daily chart, I mean. Weekly chart is improving, and not until it gets into the 42.50s, actually, I would even say, I'd be brazen enough to say that if it can get to 44.35, that's going to be a major breakout to the upside. Let's just see how it even handles the 41s, because even 42.20 at this point is going to be tough to get to unless it's just a sudden move to the upside. Now, so the answer is to that question, yes, there are different patterns. The RTH is a way better pattern, and it's got the Walmarts, all the biggies in it. So going through the list here of questions. So IWM questions. So I want to know, short squeeze, rally to continue into October, options expiration. Okay, we just had an options expiration. You know, I'm looking at this and it's a leg C. It should be a gray leg C. I'm going to call it a blue leg C and say this is a buy mode. The buy mode should take it at least to 144.35, the all-time high. And if it breaks above that, I have to look at the notation and say, well, what is that, a brand new A or is it an A/C? What is it in the weekly? So let's just wait to see if we get there, because if it's in the monthly, it goes to an E, and that'll be very positive. So this is what I'm looking at. Now, I'm reading stuff. I've decided to try my very best to read whatever I want, but to only make my analysis based on the Chapman wave methodology that I'm looking at. I'm trying my darndest. Sometimes it's very hard. You know, you get these cyclical days. You got the moon and the sun and the stars and you got everything lining up, and you've got these models and that model. I came across something over the weekend. What was it? Oh, I can't find it right now. It's on a sentiment thing that's based on if you're reading the news or hearing the news, whatever happens can be placed in the market, tracked for a 3-day trade. It sounds great. It sounds a little too far-fetched, but maybe it's correct. I don't know. But I'm looking at it and I'm saying, try to ignore everything. And what do we have? We have the IWM, which was the strongest, then the weakest, then the strongest, and then lately it's been the weakest. Now, one of the strong ones, it isn't a new high, but boy, it is acting really well. Put it together with the NYA.X, the New York Stock Exchange, breaking out to all-time highs even as we speak. I have to tell you that I'm not sure what it's going to be that drags this market. I'm not talking about a 200, 300, 400 point pullback. I'm talking about 2,000 points. It's bound to come at some point. I don't see it yet, as long as we can keep up that rotational aspect, because the rotation, look, the IBB, stuck. I've never seen this before in the IBB. In a range, 336.25 was the high on the 1st of September. It hasn't 336.59. It breaks a tad. It goes to a C. Okay, so it still could go to a D. It squeaks to a C, and now it's stuck in this range between the 336s and the 330 level, and it hasn't been out of it for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 bars, 15 days, and it hasn't broken that range. I think it will break that range at some point, but I'm watching it closely. But wait a minute, look at the SMHs. What a move, another move of 1.6% today, up $1.46 at 92.55, all-time high in the daily, all-time high in the weekly, all-time high obviously in the monthly. I shouldn't say obviously, but it's in the monthly. And what's really important about it, it's got leg D in the monthly, leg, the way it's worked for the past few months, that previous instant restart that we've seen in so many charts, in monthly and weekly charts, turns out to be a D going to an E/A, and then that's a recycle to the upside. I'm going to give it the benefit of the doubt right now and say this is a D/C, but there's nothing negative yet because the MACD is good in the weekly chart and the stochastics at 85%. The MACD in the daily says, hey, you're a little bit overbought. You should be pulling back very soon, but it's not a sell signal, not from here. We've got another segment coming up. I'll try to deal with some of the other questions, but I wanted to answer some of them, and a lot of it had to do with the ratio that we're looking at in terms of the move to the upside, what's pertaining to it, what's keeping up that move, and I'll talk about that when we get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
All right, don't forget, Steve's show comes up straight after mine. Should be a wonderful show. Then you got Dave White, you got Tom O'Brien, and Tom's coming up to the Boston area end of the month. Check it out. Should be really exciting. And it's right here, Burlington, a few miles down. So that should be fun. So the question is about natural gas. Natural gas leg D, very strong, 3.141, up 117. I think that's the reason why the commodity index is being helped a little bit, even though gold is pulling back and silver's pulling back, copper pulling back. So energy, this is what I love to see. I don't like the fact that it's made such a quick A, B, and now in C in the weekly, but I love the sine wave pattern that goes from the arch to the cup and then back again. And this suggests that natural gas could go to 320 to the 320s. And if it holds the 320s into the close this coming Friday, on a weekly basis, that'll be really good action. Support right now is very strong at 3.05 to 2.99, somewhere around there. It's looking very good. Monthly chart is just improving, but it's still very, very weak. Hope that helps you, Greg. Next thing is, so question about Boeing. Look, Boeing, all-time high. Yeah, every day, all-time high. What can you say? Leg D, leg F in the weekly, I'm not sure. It looks more like a C. It's got the character of a C, but it's looking very good. And leg E in the monthly, breaking major long-term resistance 3 times. This is the 3rd month now that it's doing that. This is good action. ITA, what was ITA again? I know I did work on that a while back. Oh, I'll have to do it over again. ABC, this is a strong leg D. This is ITA is. iShares, US Aerospace, I did this. I don't know why it's not showing the letters, but yeah, this is looking very good. The one that I usually use is the PPA. PPA is that's the one that I usually do work on, which has pretty much the same chart pattern. And that went to an A, B, C. This is a D, and now it's got a brand new A and a B. Yeah, this is very good action. Oh, my goodness, the end of the show. Folks, as far as I'm concerned, we should be running into midweek, and then we're going to have to check things out. We're still only in leg C in the Dow and the S&P. I'm expecting in the Chapman Wave methodology to get to at least a D. That has to take a day down with no new high, and then a new high, and then a day down that gets you to D. So keep that in mind. Dow's up 73, and we will be back tomorrow. Check out my opening call. I think you'll find it really informative.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.